I'd like to welcome you to today's webinar about ESG and emerging markets equities. My name is Sina Hartelt and I'm a senior analyst at Esg Analysis. And I'm happy to welcome Jürgen Maier, an expert for emerging markets and ESG from Raiffeisen Capital Management. Hello, Jürgen. Thanks for joining.
Hi, Sina. You're welcome.
Before we dive into the topic we came for, I would like to encourage you to type in all the questions that you might already have or that will occur during the webinar into the chat box. We would either answer the questions during the session if time permits it, or we would get back to you after the webinar. We try to incorporate questions that reached us in advance into the context of the webinar. But now I would like to come back to why we are here today. To what extent can sustainability in terms of E, S, and G, environmental, social, and governmental standards, and investments in emerging market companies be combined? Is it possible to find truly sustainable investment opportunities in emerging markets and invest in the transformational change towards a more sustainable economy in these regions? Especially keeping in mind that ESG standards in emerging markets are often perceived as low by investors. Once again, I would like to welcome our guest today, Mr. Jürgen Maier, lead fund manager of the Raiffeisen Sustainable Emerging Markets Equity Fund. He is a well-experienced portfolio manager of the Emerging Markets Fund Management team of Raiffeisen Capital Management. Jürgen, please give us more details about yourself, how you focus on emerging markets, especially in combination with ESG, came about, and please also give us more insights on the Emerging Markets Fund Management team you are part of.
Thank you very much for the introduction, Sina. Thank you also for having me here today. So my name is Jürgen Maier, as already explained. I'm a part of the Emerging Markets Equity team in Raiffeisen Capital Management. And I spent my whole career managing equities in emerging Asia. And my big country focus is on countries such as India, South Korea, Philippines, and Thailand. And yeah, I'm now working more than 15 years for Raiffeisen Capital Management. I still like it a lot. And even before, I spent also managing equities at some German competitors, and even during studying, I spent a lot of time in Asia. So I'm a big fan of Asia, a big fan of investing in Asia, and also a big fan of ESG. So that's also one of the reasons why I'm now head of the Sustainable Emerging Markets Equities Fund. And yeah, I will now continue with the team, because what's very important here at Raiffeisen Capital Management is the team approach. That means we manage the funds on a team basis, and we are actually quite a big team also in emerging markets. So it consists of 12 people. We have like 8 people on the equity side and also 4 people on the bond side. And we think that is also like a big success factor, because we have like a country split by team member. That means that every fund manager is responsible for a certain country. And this also means that we are the fund manager and the analyst at the same time. And this also means that the person with the deepest know-how for a certain company also is making the decision. Just to introduce the team, to get like a slight feeling who is responsible for what. So the head of our team is Angelika Milndorfer. She is responsible for the Russian market. Then we also have Andras Szalkai. He is born and also grew up in Hungary and is responsible for the Central Eastern European markets, Poland, Czech Republic, Hungary, and also covers the Middle East countries. Continue with Gregor Holek. He's our guy for Turkey and also helps Angelika a little bit in Russia. So these are the three main persons for us responsible for the Eastern European markets. Then switching over to the Asian side, we have Mark Monson. He is our Mr. China. China, as you know, is now for us the most important market, and it's becoming bigger and bigger and more important. He has a lot of experiences in managing Asian equities for more than 30 years. He grew up in US, but spent most of his life in Switzerland and Hong Kong, interestingly also managing Asian equities. So also a lot of experience here. Continuing with the Asian team, we also have Leopold Quell. He is responsible for Taiwan and also for Malaysia, also with a lot of experience. I already introduced myself as I'm covering India, South Korea, Thailand, and Philippines. And the last member of the Asian team is Manuela Kielinger. She is responsible for the Indonesian market. And the last man here is then Jörn Lange. He is responsible for the South American market, as he is covering like Brazil, Mexico, and also some smaller markets like Peru, Chile, and so on. And additionally, we have then 4 people on the bond side. That's Ronald Schneider, who is covering the Eastern European part, Stefan Grünwald, which is covering the Asian part, Martin Marinov, which is covering the South American part, and Olivera Antoniewicz, which is covering then the Middle East part. So therefore, quite a big team, and we also change ideas quite a lot. So we have like regular meetings with the bond team to discuss the top-down perspective, and at the same time with the equity fund managers, we always discuss then as a sector outlook, how we see certain companies in each sector. So therefore, it's actually quite nice to work also in a big team on the emerging market side. And this also gives us a good opportunity to share the know-how.
That's how it sounds. Sounds you can rely on a well-experienced experts group on your team, and you have a good backup in case of absence. So it sounds very good. So maybe I would proceed, and I would like to add a few words on Raiffeisen Capital Management. Raiffeisen Capital Management started very early with the management of sustainable investments and can thus look back on many years of experience in this topic. Raiffeisen already launched the Raiffeisen Umweltfonds back in the early 1990s. And the assets under management today total up to 45.2 billion euro, of which 30% are managed sustainably already. Raiffeisen Capital Management offers, as you can see, a wide range of sustainable investment opportunities for the different asset classes. And Raiffeisen Capital Management is also in the transformation process to expand and truly deeply integrate ESG principles into all their products. But not only Raiffeisen Capital Management sees the need to consider ESG. ESG investing has been gaining serious traction for some time that you're probably feeling yourself. Considering ESG when investing has changed from a niche topic to a core strategic element for most asset owners and managers. The overall goal is the transformation towards a more sustainable economy. And current regulatory initiatives aim to bring structure to this. The taxonomy has taken the first steps towards a common set of environmental definitions to be used across the industry, but there will be still a lot of clarification and alignment to come. Especially this year marks a turning point because various EU regulations have come into force and are changing the investment landscape. Asset managers cannot avoid the topic of ESG, and as I am sure you are aware of, that there are 3 categories of products in terms of investing sustainably. Your fund, Jürgen, the Raiffeisen Sustainable Emerging Markets Equity, belongs to the second category and therefore is classified as an Article 8 fund of the Sustainable Finance Disclosure Regulation. Please be so kind to walk us through the process and give us some insights on how you construct your portfolio.
Yes, for sure. what's important at Raiffeisen Capital Management is that we see sustainability not only at avoiding certain criteria, also like certain part of companies, but we see it more as a holistic approach. That means like the whole part as a E, S, and G is very important for us also in choosing which companies fit into our portfolio. And therefore, it's also for us like a cyclical process where all three parts, avoidance, support, and influence, are very, very important for our investment process. Just to give you also some feeling and also some examples, how does it look like? The first step, avoidance, it's the more easy part because that means also there are like negative criteria and there's like a list where we are not allowed to invest. So that means, for example, we won't invest in the company which is in the production of coal. So for example, in my markets, coal India is not allowed. Then the second step, and the more important one, is then the support, where we also then implement this ESG strategy and this ESG reports into our investment process. That means we have a detailed look at the companies. We look at the best-in-class companies. We compare companies, how they differ from the other companies. And we're also doing a lot of support for the companies itself. That means we exchange our views, we support them. If there are information's missing, we will tell them, hey guys, look like because of this and this rating agency, there's still some numbers missing. Please present these numbers. That's especially important in emerging markets, because as also our investors would know, that in developed markets, this ESG concept is already lived with the companies for quite a long time, but in emerging markets, it's still quite new. It's getting better and better year after year, but still, even when we launched our fund in 2017, for some of our meetings, even top management for certain numbers, they just didn't know where they get them from. So therefore, that's also very important for us to support the companies, have a detailed look at this ESG reporting, and then also have here contact with the companies. And this is already bringing us to the third step here, to the influence, where I think the most important part of the active management is also this engagement with the companies. We have here different kind of engagement. So the first one is also here listed, this direct corporate dialogue, where we communicate with the companies. That means we have like meetings with the companies. Before Corona, we would met in India or in South Korea. The last 1.5 years, it's now online meetings, but which also works really, really well. And we have here also like two ways. That's as the first one is like proactive, and the second one is then also reactive. So proactive means that we also discuss ESG points and also influence. Just to give like an example again out of India and like also companies which we are invested, we own certain stocks in the IT space, like a data consultancy, HCL Technologies, or even like an Infosys, because we like the business model overall very well. And if you look at certain numbers like the attrition rate, then you could see that like a data consultancy is doing significantly better than an HCL technology. So this it's now like the first step with this proactive approach that we also discuss with HCL Technologies, how they can bring down the attrition rate, how they can treat their employees better, that they want to stay longer at the company. So this would be like the first step here. And the second one is then so after some ESG issues that we also discuss points how to avoid this for the next time, and this is called like this reactive engagement. And just to also give an example again, one of the biggest bank in India, ICICI Bank, they had an issue where the old CEO through her husband, they were giving some money to companies related to the husband, and it turned out that this was not really in accordance with all the rules, and this company then went bust. So therefore, the company fired the CEO, And then afterwards with the new CEO, we also discussed the points as how to avoid such circumstances for the next time. So that's also very, very important. And maybe just like one last point here on the influence point is what's also very important for us is then the exercise of voting rights. That means also we also do the proxy voting. For certain companies, we even means that we work together with other companies and we discuss them points like what's the salary of the top management, any ESG related stuff. Then also like what's very important for us is like the independent members of the board. So these are here really, really important points. And this we also then do this engagement through the proxy voting in the annual shareholder meetings.
Hence, I do understand. You seek to understand how companies consider ESG issues, and you also engage with them. You try to influence their behavior and also support them on the way of transformational change and earn the results, hopefully. So we're looking forward.
Yeah, and we think it's very important in emerging market space, yeah, because the good thing is that you can really see a company also that, because we have like a lot of really, really good ESG compliant companies, but sometimes they're just like certain data missing, yeah. At the same time, we also have like a lot of companies which have some big difficulties in terms of ESG. So we try, as if it's not like a really factor which knocks them completely out from our investment horizon, then we try to influence them that they change the business structure also. And the good thing is that we also see then the process. Yeah, so it's also very nice that was when you met the management 2 years ago, 1 year ago, half year ago, that also step by step they are following our advice, and that's also like a good feeling that we can also change the world a little bit by our work, that also in terms here of ESG.
I'm sure. But maybe we could, because you were talking about the data, maybe we could take a closer look at the data, because getting the non-financial data can be a challenge. Though more and more companies now produce sustainability reports, and investors like you, as well as customer attention, is pushing companies to improve their standards and their reporting on this. There remains a lack of universally accepted reporting standards, and certain investment segments, like the emerging markets, still pose immense challenges due to the insufficient ESG data availability, quality, actuality, accessibility. And this lack of transparency seems to make it difficult in a lot of cases for investors to accurately assess the ESG concerns. So please dive a little more into this, and what is your view on this, or your experience? And maybe also, are you actually able to invest if you can't get the data you need to assess that company on both on the non-financial and the financial side?
Yeah, that's a very valid point, Sina. Yeah, because like a lot of times we really have difficulties also to getting the necessary information. Just to also give you like an overview, and I will also talk about the specific investment process later on. We use data from, also do data providers. It's MSCI on the one side and ISS Ökom on the other side, to get quite a good picture. And we bring these two data providers together with our own data, then together to like a so-called RCM ESG score. And that's like the most important valuable score, which we then also use to choose companies for our portfolio. And we are not allowed to invest in companies if we don't get a necessary rating from MSCI, or if we don't get the necessary rating from ISS. So we need like both data providers. What we can do, and what also works quite well, is if there are some companies where we currently don't have a rating, we have interaction with both of these providers. So currently it's a little bit more difficult to get the necessary data from ISS, as MSCI is here doing a little bit better job also to be up to date with also like a lot of new holdings or even IPOs. But what we do is then, as if we find a company really, really interesting, is that we connect to ISS, talk to them and say, yeah, we would like to have a rating for this and this company. Can you please speed up? It would be in our view a very, very interesting company. So that's then how we work in emerging markets. But the good thing is that if you look overall, that the number of stocks available for us is increasing every year. We started the Sustainable Emerging Markets Equity Fund in 2017. And just to give you also some numbers, as back then, the number of companies investable was significantly smaller than nowadays. So we started with around 350, 370 companies back in 2017. And now
I'm sorry, on your short list.
On the short list, which we then really can invest in. And that's now, we are currently approximately at 500. So therefore, this number is also increasing quite a lot. It was quite slow in the first years from 2017 to 18, but then 2019, 20, even this year, we see these numbers improving quite a lot. And maybe just also for the understanding of our audience, to give you like a feeling how this investment process works. Overall, so we look at all companies in the emerging market space where there's a rating available from MSCI and ISS Ökom, and that's currently for around 1,000 stocks. We also get this rating. So this is like the first step in our investment process. This is then followed by the second step where we evaluate like the negative criteria. That means we look at, we have like company-wide criteria, like we are not allowed to invest in coal companies. We are also then don't invest on the sustainability side, like in oil-related companies. And then we also have like all these factors, which means like violation of human rights, violation of labor rights. We don't invest in nuclear trading and also producing of nuclear material and so on. So there's like then a whole list of negative criteria. So if somebody's interested, we can discuss in the detail later on. And this negative criteria means that around 20% out of this 1,000 stocks fall then out of our universe. And later on, we get to the second step, which is this detailed ESG analysis. And here we do like a detailed, really ESG analysis and then really focus on the companies itself. So this means we have like a detailed look. And after this second step and even the financial analysis, like another 30% move out of the investable universe. So like approximately then 50% stay also after the second step. And this detailed analysis, this is also like active management. Just to explain, for example, if you look at a company like Alibaba, which if you look just at the MSCI rating and ISS rating, it looks quite good. But then we sit together with our sustainability office and discuss the details. And then if you look at the working environment in these logistics centers, then also if you look at the working environment for this last mile delivery and so on. So we found a lot of steps where we think that it might be quite a difficult industry, even this e-commerce industry. And even here, Alibaba is not rated the best in certain terms. So therefore, we decided then together with the sustainability office that we don't invest in Alibaba and it's not allowed for us to invest in this company. So that's also this active management in this detailed analysis, which is very, very important. And after these two steps, then we have this Raiffeisen ESG scorecard where we look at the ESG rating of the company and also the financial rating of the company. And out of this around 500 stocks then available, we choose then the best 70 to 90 stocks, so currently a little bit more than 80 stocks in the portfolio. And then we create the portfolio for our investors, which we think in the long term are the best fit in terms of upside and also in terms of ESG. So that's important. And all along the line, we continue with the engagement, also with the voting. So that's for us also this active management, which is very important, especially on the ESG side.
Well, you do apply a very strict ESG philosophy. If you reduce your investable universe approximately of 50% of the original equities, so that's a very strict ESG philosophy. But I would also to take a closer look into the Raiffeisen ESG scorecard if possible, because it's a core element of the investment process. Are there strict minimum requirements for the financial or non-financial side of a company? And maybe you can say something about differentiating between different sectors.
Yes, of course. I will also present some examples because I think it's also easier to understand the whole process here. Just start with the first company. It's Taiwan Semiconductor Manufacturing, which is like the biggest holding currently in our fund, and which is also the world's largest independent foundry, so which manufactures semiconductor or chips for all like the big guys in the world, like Apple, Qualcomm, Nvidia, Broadcom. And this is like a good example because it combines the best of both worlds. If you look on a financial perspective, it's like a company which has like a really, really big moat. Like Warren Buffett always explained, as you should invest in companies like with a big moat, and that's like a company which has really, really big moat, which means that they have a technological advantage compared to their competitors, and there's almost nobody left. If you look at the competitors, Samsung Electronics is still active in this space. Also, Intel, it's still active in this space, but even for them, they are now outsourcing some part of their production to TSMC. So even for them, it's getting more and more difficult because you have to focus on a new technology all the time. Currently, they're working already on the 5 nanometer products. It's now becoming the 3 nanometer in the future. So it's getting smaller and smaller and more complex for the companies to focus in this field. So that's like the first aspect. Also, if you look at the financial perspective, it looks really, really good. And then if you look on the ESG or sustainability perspective, it also looks really, really good. Because if you compare the company with the competitors, then they are the leader in conserving water and also water waste management, or even in the normal waste management. More than 95% of the waste is getting recycled. It's increasing every year. So they're also doing a really, really good job here. And it's interesting because even if you compare their facilities with the newest facility, for example, like this new Infineon facility, which is now coming up in the south part of Austria, they are doing a better job here on the sustainability side than even the newest facilities from the competitors in other part of the countries. So therefore, an excellent example. And also, if you have time or just have a look at the ESG report. Also, they have like a 230-page ESG report, which gives also some really interesting facts. For example, because they're offering like kindergartens in all their facilities, and which means if you look at the number of employees, they have around like 50,000 employees. It's like 0.3% of the population
Quite a number.
In Taiwan. But at the same time, if you look at the newborns, so 1.5% of Taiwan's newborns are coming from Taiwan semiconductor employees. So it's quite interesting because they are making a good environment for their employees. Also in terms of salary, they're by far one of the best in Taiwan. So it's also leads to like a really low attrition rate, and that's also very important here. And just coming back to your question, what is the outcome? This is this ESG scorecard. If you look here on the right upper corner, that means they are leading in this Raiffeisen ESG score in the emerging market space. They are also really good in this financial score. So it's like a really, really good fit for our portfolio. And then I think we won't have the time to focus also then on this SDGs perspective. But if you look then also on the special SDGs, they are really good in certain factors, like this development of energy efficient manufacturing processes. They also have like a goal of getting like almost like 1/3 of the power from green energy by 2025 and so on. So they are doing a really, really good job. And so it's one of the darlings in our emerging markets universe. And if you have time, just go to Google, click on the ESG report from Taiwan Semiconductor. It's also a very interesting read, and I think it's for everybody that you can learn quite a lot.
So you do need to have enough transparency and a minimum of data points to be able to invest. What maybe could also be interesting, who all is involved constructing the ESG, the Raiffeisen ESG score, and what is your role in this? Do you have any influence on the Raiffeisen ESG score?
No, so we have like a sustainability office which is calculating this ESG score, and this can't be influenced by the fund managers. It's really, they have like a strict formula how they calculate this one, and also we can't influence it. Yeah, that's like, also what we can do is through engagement, try to convince the companies to increase their focus on ESG, that they also can increase our Raiffeisen ESG score, but at the calculation itself, we can't influence it. Yeah. And what is also very important in the investment process, what I forgot to mention before, is that before we finally invest in a stock, we sit together with the sustainability office and have one more detailed look at the company, so that also we can really be sure that we avoid any reputational damage or any issues. So even then, with the final process where we then choose the companies which then really come into the portfolio, we have one more meeting with the sustainability office to really make sure that even in the fund management, we didn't overlook anything here in terms of ESG.
Yes, sounds really a holistic process that you apply. And maybe we could also, or maybe one question, because of the example you brought, is it of any importance, because it's a constituent of the ESG emerging market leader index? Is that of any importance for your investment decision, or do you have a benchmark or an internal, any internal you have to fulfill or that you strive to?
Not really. So for us, the most important part is this Raiffeisen ESG score, which there's like a hurdle rate where below a certain hurdle rate, we can't invest in companies, and above, the better it is, then it's also more interesting for us. So like Taiwan Semiconductor, it's one of the companies which has like by far the highest rating in the emerging markets universe. But we do not really look at competitors or some leader indices, but we are happy that even our positions are then in other, if also other people look at it the same way. But like Taiwan Semiconductor, it's really like a good example, because they are by far one of the best examples.
Okay, and maybe we could one time get what happens when you don't have the data available and you really can't convince the companies, because you said you also push the companies to provide the data to the agencies, ISS and MSCI. So what about if a company just does not deliver the certain data points you need? You're not able to invest?
No, then we unfortunately are not able to
You
invest.
are not, okay.
Yeah.
Okay.
So we are quite strict, and I think that's also the goal from Raiffeisen Capital Management, to like have a really like detailed and very strict investment process, and that also really only the really good companies come into our portfolio. So if there's some data missing, we try to convince the companies that they present the data, but if they don't provide the data, we are unfortunately not allowed then also invest in these companies.
Okay, very well. So maybe you could dive a little bit more into the other topics, like E, S, and G. How much impact do they have on your investment decision? How you integrate them? Maybe you could move on to the next investment case and maybe give some more insights on how you consider all three factors, because the spotlight always is on environmental standards today, climate change, Paris alignment. So what about S and G? How important are those factors to your investment decision?
Yeah, of course. To also show you like a second example, it's data consultancy services in India. It's one of the world's biggest and India's largest IT service and consulting company, with more than 500,000 employees. So it's really quite a lot. But even if you look at the competitors like the global peers, IBM and Accenture, they also have like a few 100,000 people working out of India. And some Indian competitors like Infosys, HL Technologies also have like a few 100,000. So it's anyway, industry is quite a lot of people. But yeah, to give you some example, it's also like a good company to show that not only this E perspective is important, but also that the social part and also the corporate governance part is very important. What we like at data consultancy group is on the social side is how they treat their employees. Because normally like this IT consulting companies are known for their quite high attrition rate. If you look at their peers, it's normally between like 15 to 20%. That means like around 15 to 20% of total employees leave the company per year and are switching to another company or doing something else. And what we like at data consultancy on the social side is that they implemented an internal digital training program where you can learn new stuff like a new programming language or also some new project management skills, and you get like a certificate when you did this job. And with this certificate, then you can work on new projects where you can also then implement the knowledge learned in this training program. And this leads that the employees are quite happy investing and working for data consultancy, and that the attrition rate compared to the industry is only at 7%. As last year, data consultancy had by far the lowest attrition rate at all. So therefore, that's like a big plus here. And also, if you look at data consultancy, what we also like a lot is how they treat women. Yeah, because in India it's still not standard that when you get like a child that you can stay home or work part-time. And data consultancy was leading also this movement in India. And the really good thing is also that when like the biggest company in India starts with such very important behavior, then the other companies are leading. So currently, even their Indian peers are already offering also like working half-time or special education after you're coming back from baby break and so on. So that's also very nice for us to see, is that these poster boys of the Indian IT consultancy, if they implement some very positive environmental impact and even social impact, that the other companies are following these steps, and to convince their employees they also have to offer the same part. So that's very healthy for the whole industry, and not even industry, but for whole India.
It sure sounds convincing. I see there are coming in some questions from the audience, and I would like to take one question. Jürgen, where would you see the advantage of integrating sustainability? And has there been a point in the past you found the integration and consideration of ESG a hindrance for constructing the portfolio?
It was quite difficult, to be fair, when we started the fund in 2017, because we did a lot of preparation work already in 2016. And then it was quite difficult because we have this long experience also tracking the companies, and we knew that some companies, they are by far the best within their ESG space, but they didn't provide the data. So this was, I think, the biggest issue when we started the fund back in 2017. And this luckily is getting better and better. So this is improving quite a lot. And what is also good is because this demand for ESG reports, it's not only strong from our side, but like a lot of European and even US peers and even now Asian peers are now also looking for this ESG analysis. So therefore the pressure for the industry is improving quite a lot, which also means that these rating agencies, they also hire more people, they are able to produce more reports. So therefore it's like even like a cyclic industry. So it's improving for the whole industry. We are getting more data, we can more companies to choose from. So there are then more investment companies also focusing on the ESG perspective. So it's improving really from year after year. So that's the big advantage which we also currently have. And I think currently there's still some mid-cap companies, also sometimes small-cap companies, where we still find they are excellent in terms of ESG, and they're also excellent in the potential outlook and upside. So therefore, we interact here with the rating agency to get like a special report for these companies. But for the large cap companies, also we feel quite confident and are already happy that for most of the companies we get also a good ESG report.
That sounds very, very convincing and very promising on all sides, because of all the impact that's coming from all the different participants of the industry. So maybe let me round up. Your investment process can be summarized as a complex and fully comprehensive combination of negative and positive criteria with ESG momentum, engagement, proxy voting, which we haven't talked about much, but you do apply, and a minimum of ESG score requirements without neglecting the financials, or they being just as important as the ESG criteria. Numerous certification and awards at fund and company level prove the successful approach. But after the deep dive into the investment process, I assume everybody would like to take a look into the allocation of the fund and its results. So please, Jürgen, let us take a look into the allocation.
Yes.
There we are. Thank you.
Yeah. We start with the country perspective and also sector perspective. If you look at the country profile, it changed quite a lot over the years. Yeah, when we started the fund, Taiwan was by far the biggest exposure for us, with more than 20%, and China only the second, which around like 16 to 17%. And we also had back then, 2017, more exposure to countries like South Africa, even Brazil and other markets. And this changed quite a lot in the last years, yeah, because China, even in terms of ESG, has become quite successful. And we also find a lot of very interesting companies in the China context. So therefore, China overtook Taiwan here in terms of country exposure. And even now for the fund is more than 30% of the fund nowadays is here related to China. What do we like in China? It's like certain sectors. Also the first one is the whole sector, which benefits from these targets of reducing CO2 emissions over the years. So that means like companies like Jinji Solar, like Sunwind, Goldwind, and so on, which are wind producers, solar producers, battery producers like a BYD. So that's like one aspect. At the same time, we also like certain companies on the technological side, despite that they're currently in this crossfire from the regulation. But we also own like a company like Tencent. There we also have a very high conviction, because Tencent, also they operate on one side, they operate WeChat, which is like the Chinese version of WhatsApp. They also have like a gaming part. But what we like here a lot is that even in the past, Tencent was here leading, or even China was here leading, by reducing the number of time people below age of 18 are allowed to also spend online with gaming. And this is now even getting tougher. So currently people below 18 years are only allowed to spend like 1 hour each on Friday, Saturday, Sunday. So we also support these very strict rules. And we also think that for the complete society, it's not good if small people or if younger people spend half of their time online and with gaming. So therefore, we also even support these quite sharp measurements of the Chinese government here related to the technological companies. Taiwan is the second biggest country sector still. So it's Taiwan Semiconductor and also some other IT-related companies, but also on the financial side, we own some companies here. We also find it quite easy to find here good rated companies. Also India we like a lot. Korea, it's a little bit more tough. Also we don't invest, for example, in Samsung, because there have been some corruption cases in the past. We also don't invest in all like these car companies, Kia Motors, Hyundai Motors. We don't invest in all these shipbuilding companies, because we have some big ESG issues with these companies. So therefore, that's like a country where it's a little bit more difficult to find companies. And then also the complete Eastern European part. Yeah, so it's almost impossible for us to find investments in Russia. So you can get the suitable companies on one hand. I think it's below 5 companies which would even be suitable for us to invest in. When we switch to the sector, also we are quite strict, as we don't invest at all in mining companies. We don't invest like in oil producing companies. So this means also, if you look, we have like zero exposure to the energy companies. We almost have zero exposure in the material space. So if you look at the material space, we only own 2 companies which are packaging producing companies. So that's Siam Esg Packaging, which is like a daughter company of Siam Cement in Thailand, and also Klabin in Brazil. But otherwise, we also don't own anything here in the material space. On the other side, also we have like bigger exposure in financial stocks, which is sometimes also a little bit unusual in terms of sustainability. But we found out that a lot of these financial companies or certain financial companies are doing a really, really good job on the social side. Yeah, how they treat their employees, also how they deal with the society. So we own like a Sina Financial in Korea, or also like a housing development finance in India. So that's we also like a lot. And the good thing on the financial space is also that because of this really bad performance over the last 5 to 10 years, if you look at the valuation multiples, they're trading really, really low. Yeah, so there is huge upside when this company deliver on their targets. So that's we also like a sector which we like quite a lot.
Thank you so much for those insights. Since time has already well advanced, I would suggest that we move on to see some numbers, because I guess the audience would probably like to see how the fund performed. So maybe give us some more insights on the performance of the fund, please.
Yeah, performance, we are quite happy. So for us, the target, we don't have like a benchmark for this fund, but overall, our goal is to outperform an MSCI Emerging Markets Index over the mid to long term. And this we also achieved in the past 3 years, even since inception. So this worked quite well. And we are quite happy because the good thing is also we have quite a lot of companies in our portfolio where we still see quite good upside or even huge upside. Yeah. So therefore, even the overall difficult part has been more for the overall emerging markets universe, that emerging markets have significantly underperformed developed markets over the last 10 years now already. So therefore, we are quite confident that in the coming years, or hopefully even this year, we see like also a turning point here, that emerging markets start to outperform developed markets again. And then we are quite confident that with this fund, we also should be able to benefit from this trend in emerging markets, and should also be able to, in the mid to long term, to outperform an MSCI Emerging Markets Index.
For sure, you don't have to hide yourself. We scope measure your fund, the Raiffeisen Sustainable Emerging Markets Equities, in the peer group Equity Emerging Markets. It's no explicit ESG peer group. Hence, most of the funds in this peer group are managed with a conventional strategy. In 2019, in 2020, as well as over a 3-year period, the Raiffeisen Sustainable Emerging Markets Equity was able to outperform the average of its peers. And year to date, it's close to catch up. So please, Jürgen, what were the reasons of slight underperformance year to date in comparison to the average of the peer group of the fund?
That's a little bit difficult to say for me because we don't track our peer group also that closely. But if you compare us to like an MSCI Emerging Markets Index, so we outperformed even year to date our like an emerging markets ETF. So therefore, it looks like that our peers did a quite good job year to date. That they have, or most of them have been better than also the MSCI Emerging Markets Index. So
the catch-up is going to follow shortly, I guess.
Hopefully, but yeah, we can't outperform also in all the times. So for us, it's important, and it's also we are like a bottom-up stock picker. So we also don't do asset allocation. So most of the time, as long as we see opportunity in certain stocks, the fund is almost close to fully invested all the time. So therefore, you also see like last year during the Corona crisis in March, also we had this sharp drawdown in the fund. But that's normally, it's quite a nice time for us fund managers, because for us it's like Christmas, because after this sharp falls, it's very easy to choose really good companies which significantly upside. And also most of the time was that we have like a wish list of companies which we like a lot, but which are too expensive. And these are the companies which we also can invest when we get these drawdowns.
Yeah, so maybe we could take a closer look at the risk side, because consideration of ESG factors can also contribute to risk reduction in volatile markets like emerging markets are. And so maybe explain the fund's results on the risk side and its main drivers, like you already started.
Yeah, the good thing is when you invest in these ESG companies is that it's like a portfolio where I can sleep really, really well. Yeah. So like the potential that some company really blows up is really, really very small in this fund. And that's also the good thing is for us that because they're more like quality players, we had like a detailed look at them. So therefore, even if you buy this fund, keep them for 5 years, you can be very, very sure that there won't be any really big blow up in these companies compared to some other funds or even like an MSCI Emerging Markets ETF, where you always have the risk, like in the mining space or related space, that there also could be some potential risk that something blows up. So therefore, we feel quite confident with the fund, and also for us fund managers, yeah, we feel quite happy because it's like a fund because of these investments where we can sleep really, really well. And also, if you look at tracking error, Sharpe ratio, I think something which we are quite happy about. Also, volatility, it's quite close also to an emerging markets ETF, so there are no that big differences. Some of the time when it's drawdowns, we do better, but also not significantly better because we are normally fully invested. But over the long term, the target is to outperform an MSCI Emerging Markets ETF, and also with a little bit of lower volatility compared to an ETF.
Thank you. You also brought an overview that where you compare, or the comparison of companies in the fund towards the whole market. Please give some explanation what you measure and maybe what you consider the whole market, and maybe also add if this is of anything importance, or do you actively try to influence it when constructing your portfolio, because you do not claim yourself to be an impact fund.
Yeah, this slide just I want to show you also that like investment in an sustainable emerging markets has also an impact. And if you look at certain parameters, if you look here compared to like MSCI Emerging Markets ETF, like our portfolio has like 82% less CO2 emissions. It's like 99% less waste, 88% less water consumption, and 16% less work accidents. And that's because also of this very stringent investment process which we use here for this fund. That means we don't invest in mining companies which use like a lot of water. We don't invest in utility companies which also use a lot of water and also generate quite a lot of waste. Even this is for mining companies. Also with the oil companies. Also because avoiding these utility companies, we have significantly less CO2 emissions. The nice thing which you see with this slide is that it's not only the fund performance, but there's also an impact. Yeah. So if our investors look at the portfolio holdings and look at the overall fund, we have also an impact on the economies which and where we invest. So that's, I think, also to give you quite a good feeling about using this sustainable investment in emerging markets. And we are not like an impact fund itself, but in terms of engagement, we also try to have certain targets and bring certain companies also to a significantly more greener way in the future.
Thank you. Jürgen, time is very well advanced already. So maybe, first of all, thanks for joining today and giving us the chance to get those valuable insights into your holistic approach to combine ESG and emerging markets equities. And please give us a very short summary of the important facts to round it up.
Yeah, of course. I think the big advantage which we have as Raiffeisen Capital Management, that we have quite a complete team and also a long way of experience in investing in emerging markets and also on the ESG side. So we are doing this ESG investment since 2013, also for other funds, and since 2017 now for emerging markets. So we have been some pioneers also in the emerging market space. And it's not only us, because it's easy for us to talk about how we implement sustainable investments in emerging markets, but you can also see on some third-party provider that, as we on the F&G level side, we have like 3 stars. I think we are one of really, really few emerging markets equities funds which have like 3 stars on the F&G label side. We also have this European transparency label. We have like this eco label in Austria. So therefore, it's not only us, but even third-party providers which confirm that our investment process here is very strict and also very insightful. And yeah, the fund itself, so it's growing quite quickly nowadays, as we are now close. Today we are around at 98 million euros. By month it was like 91 million. It's a fund which is very strict. So out of the total universe of around 1,400 members of the MSCI Emerging Markets Index, we are only allowed to invest in 500 companies after implementing this negative criteria and also using our Raiffeisen ESG score. And yeah, finally we get like a really, really nice portfolio of our best holdings, which is normally between like the 7 to 19 stocks. But overall, as we are quite confident, unfortunately, we don't have enough time, because what's also getting more important is focusing on this SDGs. So I think we can use another 5 or 10 minutes, but we won't have time today. But that's also something which we currently spend quite a lot of time on. And yeah, so therefore, but I'm quite happy that I think it's a really, really good fund for investors focusing on sustainable investments in emerging markets. And also, if you compare us to the peers, if you look at the companies, it's quite different, because for companies which even have a high MSCI score, have a high ISS score, we have this detailed analysis where we also work with our sustainability office. So companies like a Samsung or Alibaba, which you might find in some of our competitors, these are companies which are not allowed for our fund.
Jürgen, thank you so much. And also thanks to the audience for tuning in. All the information about the fund discussed and also about upcoming webinars you might find on the Scope Explorer. Please don't hesitate to go there. We hope you dial in again and wish you a pleasant and successful week.
Same also from my side. So have a nice week. And Sina, also thanks for offering me the opportunity to present in this environment.
You're welcome.